My name is Kaseem. If you're new, welcome. If you're not new, welcome back. In today's video, we are going to talk about taxes because I got a great question from one of the members of the community, one of the subscribers of this channel. His name is Gustav, and I'm gonna leave his message right here on the screen. It says, Kaseem, do you ever do taxes on this investment and those investments? So basically it's referring to, the gains and dividend and stuff like that. Do I do taxes on them? And he says he read that you're supposed to cash out and use it to rebalance your portfolio. So what I'm going to do now is to kind of answer his question. It gave me an idea to do a video because we are getting towards the end of the year, which we'll be doing our taxes by the end of the year, well, January, end of January. So first of all, let me talk about softwares that you can use for taxes. We're going to talk about softwares that you can use for taxes, which is relatively easy. They guide you through doing your taxes, and it's relatively easy. You can use software. The other aspect of things is you can pay a professional. Probably a lot better to pay a professional to do your taxes if you have no idea. You don't know anything about money, you don't know anything about finances, you don't know anything, you don't have no idea. It's better to have a professional do your tax so you don't make mistakes. If you use free websites, like I'm going to show you in a second, if you use those websites, they're really good at guiding you if you have some idea about taxes, so they're really good at guiding you. So that is that. So in the aspect of rebalancing, Gustav, in the aspect of rebalancing, the reason why I don't necessarily rebalance my portfolio is that I like to use, because I use M1 Finance, basically anytime I put in new money, the new money basically don't go into any stock that is already overweighted. And I'm going to show you what I mean in a second. New money does not go into stocks that are overweighted. Overweighted meaning if you look at your overall general portfolio, if you're supposed to have $10,000 in Apple stock and you already have $10,200 in Apple stock, well, when you deposit new money, it's going to go into the ones that are maybe supposed to have $1,000 and now it has $500. So it's going to go into that one. So that way the portfolio is always balanced. So that's why I don't necessarily rebalance my portfolio. Especially, I don't want to sell out of companies that has potential, which some of the stocks that I have, they're in companies that have potential to grow quite fast. So that's why I don't want to sell into them. But enough talking, let me just show you exactly what I'm talking about, starting with tax websites, and then we'll move on to the portfolio to explain the rebalancing aspect of your question. So, okay, Gustav, we are going to look over your question, and I'm going to explain everything to you in this video. So let's get to it. The first thing that I want to actually point out first is let's talk about free tax software that you can potentially use to do your taxes. Here, if you go on Google and you type in free tax filing, you see a couple of websites that will come out. First of all, let me point out the IRS website. This is the IRS website. You can always file your taxes for free on your IRS website, but I don't necessarily find it to be easy or intuitive to use because anything from the government is never really easy to use. But I've used TurboTax before. I've used H&R Block before. I've used a couple of these different companies before to file my taxes. But the one that I really like to use, is this company right here, Free Tax USA. It's basically free. Like some people they use Intuit, and Intuit always say free, but it's really not free. Intuit is not free. Like at the end of the day, they will get you to pay for something. People that use, if you're watching this video and you get what I'm saying, leave a comment down below so I can see, so we can all see that, you know, it's not just only me saying this. Intuit, they always upsell you on something. At the end of the day, they will upsell you on something. So I really don't like it. I used to use it before. I used it for a couple of years, so I stopped using them. But this website is basically my go-to. I recommend this website. Their interface is really simple to use. Their website is freetaxusa.com, freetaxusa.com, and you really don't pay much money. You see this $12? That's probably what you're gonna pay. You're gonna pay like $12 to file your taxes, and it's relatively easy to follow. You know, if you have a job, a W-2 job, is relatively easy to follow. It's not too difficult. If you have a business, it's easy to follow. If you have a 1099, it's easy to follow when it comes to filing your taxes. Okay, so this website, is actually very easy to use, and it's intuitive. They're approved by the IRS. And here are some of their services. You know, if you have a simple file, it's easy. If you have homeownership, HSA, all this extra things, that one is easy. If you have a small business, K1 income, investment income, you know, it's pretty easy, and you only pay for the state basically. And for this year is $12.95. You know, so when they say free, it's truly free. I really love this website. I could not recommend any other website. This website is really, really great for filing your taxes. And I'm gonna leave a link to the website below. So yeah, let's move on to the next section. The next thing that I want to talk about is like tax brackets for dividend. This is the reason why I love investing in dividend stocks, because you basically don't pay tax on the first like $30,000 of income, which I'm going to show you guys now. I mean, you can go on the IRS website, but this website is called Simply Safe. This is the Simply Safe website. They wrote a pretty good article on the topic, so I thought let me share this with you. The links to this article will be in the description for you to check out as well, like I always do with all my videos. I will always leave the resources, the resource like this website, I'll always leave them in the description for you to check out if you want to check it out and read the article. But this is the point that I wanna bring to you guys, right? Qualified dividend, how it's taxed. This is the thing, guys. Look right here. You pay 0% tax in this United States, this America. You barely pay taxes. You pay taxes on everything. You know, you go buy a piece of sneakers, you pay taxes on it. You go buy you buy a house, you pay property tax. You know, you go through a toll, you pay taxes on it. You know, we pay tax on a lot of things in America, right? So this is one of the few things in this country that we do not pay tax on, right? So the first, if you're filing single, the first $39,375, basically almost $40,000. If you're a single person and you invest into dividend stock, like I do, you're a single person, you invest into dividend stock and you're getting paid dividend, the first $40,000, is basically tax free. Let that sink in. If you have a job, you're gonna pay tax at least on your first $10,000. So with dividend, when you invest into dividend company and you get paid in dividend, the first $30,000 is not taxable. The first $40,000 is not taxable. So now, if you're married, you know, maybe one of the good reasons that you should be married. I'm not married, so I should give myself the advice. But yeah, if you're filing jointly with you and your partner, the first $78,000 in dividend payment is not taxable. Not taxable. You pay zero taxes on it, right? So And then if you're a head of household, you know, if you're looking after someone and you're single and you're filing as head of household, then the first $52,000 you do not pay taxes. You pay 0 taxes on it. Okay. So, and then here, if you make more than this amount, then you pay 15% tax on the leftover. So let's say you make $45,000. Well, they're gonna subtract 39,375 from that 40, and then what's left over, that's what you would pay taxes on when it comes to dividend investing. That's when it comes to investing in dividend. And then same thing with this. That's the basic gist of things, right? And then the article goes on to compare that to having a regular job. If you have a job and you're working for whichever company, you just have a job anyways. You have a job. So the first 10%, basically before the first $0 to $9,700 that you make as an individual, you don't pay tax on it. But anything above that, if you make like right here, if you make $9,701, you pay tax on the $1, not the $9,700. Okay, so that's pretty much how it works, and you can see the breakdown here. So that is pretty much it. This is why I basically like to invest in dividend, because dividend, when you get paid dividend, you can use that money to fund your portfolio in order for you to get paid more money. So that money just snowballs and compound over time. Your income would start snowballing and compounding over time as well. And we have a situation where in the United States, it's the law. You know, it's the law. You don't pay tax on the first almost 40 grand here, 39,000. You don't pay tax on the dividend. So yeah, I'm gonna leave this article below for you to check out if you are interested in checking it out. And thanks Gustav for asking the question. So let's go into my portfolio so I can show you the rebalancing aspect of things and why I don't rebalance. Come to the portfolio here. This is the dividend and growth investing portfolio. So when we're talking about something like this, if you can see up here, right here, the first, so far this year, I've generated $254,000. I said $1,000. $254 on dividend right here. So this $254 is not taxable. I don't pay taxes on this because it falls under the 39,000 when it comes to the tax bracket for dividend. So I don't pay taxes on this, as far as I know anyways. So that is that. So now the next question that you have when you're talking about rebalancing comes to like something like this, right? So with M1, this is the M1 Finance. This is the M1 Finance portfolio here. This is M1 Finance. Let me raise this up so you can see. So with the reason why I like using M1 Finance is basically with this company, with this software, you basically don't need to worry about rebalancing your portfolio, and I'll show you that in a second. The reason why I don't really rebalance my portfolio is, like, for example, let me show you guys this. So recently added ARK Invest to the portfolio, and I allocated 20%. I allocated 20% into ARK Invest, right? So if you look at all these other ones, you see that this right here is 30% allocation. This right here is 19. This is 8. This is 9, 5, 5, and 4. Now, what M1 does is anytime I put in new money into the portfolio, so when I transfer money from my checking account into the portfolio to put it to work, what M1 will do is will look at the portfolio and say which one is the underrated, which one don't have enough money in it, right? So M1 goes and actually just purchase those, right? So instead of putting the money into like this section now, which is overweight, because this section has 39% in it. So this is overweight. So M1 would now, instead of putting new money into this, M1 takes the money and put it in here onto this side of the portfolio, get to about 20%, the allotted allocation that I want. Once this gets to 20%, then you also now look around the portfolio and see, okay, this section right here is still underweight, so we'll start putting new money into it as well, right? So and then maybe after we'll put money into this and put money into this, once this one has been fulfilled, once this gets to like 20%. So that's one of the reasons why I don't rebalance my portfolio, because rebalancing basically means that you sell out of the ones that has gone up a lot, you sell out of it and take that money and put it into the ones that are underweighted. Now doing this comes with two cons, and it comes with some cons, some pros and cons. The pro is, okay, you're potentially selling one stock at a high, but the con is that might not be the best thing for you, because if you're selling one stock at a high price and you're buying another one at a lower price, well, the one that you're buying at a lower price, is that a good buy for your portfolio? Is that a good thing to buy that one? You know, so that's why I don't actually rebalance much, because I'd rather let M1 manage the portfolio balancing automatically, and then I just focus on, okay, putting extra money into companies that I want to own a lot of shares in, right? So that's why I don't really spend much time rebalancing the portfolio, because if I rebalance, like for example, like let me show you an example right now. So if I go here and we look at the passive income here, so if you look here, right, this one is clearly overweight. I allocate 2% for this sector right here, 2%, but it's ballooned up to 43%. Now if I go more into it, and we pull it up here, so this is the total of this portfolio. As you can see, value right here, I put way too much money in it, right? I put the total is like $5,000. Now if I hit that rebalance button, it will sell mainly out of my Tesla stock, and I personally don't want to sell my Tesla stock. I want to hold on to it for as long as possible. So, and at the same time, it's probably not a good idea to sell my Tesla stock. So that's why I'm not interested in doing rebalancing. I just let M1 basically do that part for me when I put in new money. All right. So let me just show you guys really quickly here as well. Going to trading here. Let's go into trading. Okay. So as you can see, I basically put money into the portfolio pretty much on a regular basis. And when I put money in, it goes in. So let's look at this one. Let's look at this one here. Let's look at this, and you see it mainly bought like ARK Invest, and this ones were like manual buys that I go in and buy myself. This was a manual buy, and when I put money in, automatically it buys on the weighted one, which is ARK Invest. Let me show you another one. So that was this one. So let's pick a random one, which is this one. See, again, it's buying ARK Invest basically. All NEO and SPHG, those are manual buys that I go in and buy myself. So automatically M1 goes in and buy the underweighted one. Let's take a look at this one here, for example, as well. Oh, these were the ones that I went in to buy. This was a different day. That was a different story, which I will explain why that is in my next update, next week dividend update. So as you guys see, again, boom, 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 is buying basically ARK Invest. Is going in and buying the underweighted one, because in general with the entire portfolio, ARK Invest is the most underweighted one. So when I put in new money, like here, I put in $58 and went in and buy mainly ARK Invest. I put in $123 and went in and bought mainly ARK Invest, right? Mainly ARK Invest, because that one is the underrated part of the portfolio, you know. ARK Invest is the most underrated part of the portfolio. So that's one of the reasons why I use M1 Finance, because M1 Finance take the work out of the way for me. So when I put in new money, M1 just buys the most underrated one, because whenever you're rebalancing, that's what you're doing anyways. You know, you're selling out of the stock that is the high, that has gained the most, and you're taking that money and using it to buy the ones that that has gone down in price, or the ones that don't have a lot in it, like what I just showed you with the allocations and balancing, like right here, what I just showed you guys. 20% is my target allocation and 2% is the current position. So this amount is 2% of what I'm supposed to have in there. Same here with, like, this amount is 4.6% of what I'm supposed to have in there. So I hope you get what I'm saying. And either before this video or after this video, I'm gonna also insert a simple explanation of what rebalancing is for those people that don't understand it. So good stuff. I hope that answered your question. If you are watching and you have a question as well, leave it in the description. I will try to answer it. I'm trying to create a community here where we all help each other out and get our money up to our first million. Hence the $1 million challenge. Okay, so I'm sharing what I'm doing with you guys. With my money, I'm sharing what I'm doing with you guys. So if you have a question, leave it in the links below. If you think of a way that I can improve my portfolio and make more money, put it in the description below. I would love to hear from the community. So thanks, Gustav, for the question. Thanks for inspiring the video. Until next time, take care. Bye.